following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Bill Meridian on in about 15 minutes from Vienna, Austria, Cycles Research. And tomorrow we will have Norm Winsky on from AstroTrend. So let's get on with the work at hand, and we'll start out with the DAX like we usually do. As you can see, we've had these parallel channels in the DAX over the past month. Yesterday we reached the top end of that, just a shade under the top end of that parallel channel, and that so far has held the rally, to the upside. Now, we are going to take a look now, switch over to the gold market because, we had a tremendous break in gold yesterday at $50 an ounce, which is really highly unusual. But let's take a look at the chart. This comes from our good friend in Mr. William over in Singapore. And you'll notice here that the CD wave was within 10 cents of the exact 1.618 expansion of the AB leg. In other words, if you took the AB leg by 1, multiplied it times 1.618, it would get you to the low that it made at 1268.70. Now we bounced about $10 off that bottom, but that's really not very much at this point. But this should hold the gold at least for a day or two. But frankly, it looks like it wants to go a lot lower. This is a very negative chart given the fact that you had this big break. Now this could all change if we can hold this level for a week or so. That could make it a lot different, but right now you can't do that. We have a target in silver now, the 61% retracement in the silver from the whole move, going way back to December when we had the 3 drive to a bottom pattern like we had in gold. That measures to the $16.50 per ounce level in the silver. So keep in mind that we'll be ready to we'll be ready, to do it in just hold on a second. I'm trying to answer Bill Meridian. He just let me know that he'll be on in just a few minutes, but we'll have him on in about 5 minutes. We'll have him on right after the break. Okay, now the other one that looks really interesting, folks, here is the fact that we have a really interesting pattern in the crude oil market. As you recall, just 1 second here. Let's get this up here. We've been waiting for this. We're near. Oh shucks, hold on. I got the wrong chart. There we go. Want to get the daily up here. Okay, what we're setting at now is we're setting at the 78% retracement of the move down from July to June. That comes in right at $50 a barrel, and we're at 49.60. At this particular time. So we are very, very close to what could be a small Gartley pattern. Well, it's not a small Gartley pattern. It's on the daily. But watch this level at $50 a barrel. That's going to be very, very interesting. Fortunately, Bill Meridian will be our guest, and he has a pretty good handle on what they're talking about over in the Far East about gold, and it's been pretty good response. We'll also be able to talk a little bit about the election, which is always I guess that's the comical part of what we have, going on in the move. Now, there's another move that is moving really well that we've been able to watch really closely, take a little advantage of, and that's this Japanese yen versus the U.S. dollar. We had that 135 pattern down here just about a week ago, and now we've broken out. We're trading above 103 easily now. That sets the price objectives up into the 106, 107 level without any trouble at all. In fact, the ABCD structure from June through August takes you all the way up to 109. So you could get one heck of a rally in the dollar yen from this level. So watch this one very, very closely. Now, the corn, we've been watching corn. In fact, we've been buying corn down at the 325 level. That's had a heck of a move. We're up about 20 cents or $1,000 in the corn. And I would suggest you move your stop to protect your profits. Put your stop at, say, 335 so that you've definitely, locked in a $500 profit. But I think we got a chance for this to move even a little bit higher. The fact that it didn't sell off with the rest of the commodities yesterday was a very, very good spot, or very, very important, because a lot of these people that are in gold and silver are in other things long, and they have to sell them. And that didn't happen in the corn or the beans yesterday. They sold off a tiny bit, but very, 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 very small amount. So watch that also. That's a very, very important one to look at. Another one that is really important, that's also related to the crude oil, and we've looked at this on a long-term basis, but we've been following it on the short-term basis, is the cross rate of the Canadian dollar versus the U.S. dollar. As you noticed here, we're going to have a perfect Gartley for me here over the last several weeks. That would take us up to this 132.30 level. We're trading just a tad under 132 right now, so be patient and wait for that 132.30 level. Your stop on that would have to be about 40 pips, roughly $400, but this is a really nice Gartley pattern, and on the long-term chart, it is certainly still in a downtrend, and this could be a really good entry point if, in fact, it does, come to fruition on this. So that's one more that we need to be watching. The other one that we talked about just about yesterday, hold on just a second, was the cattle market, and we've had a small rally in cattle. But I believe that we need to, and hopefully we're going to have Rich Anderson on Friday. But it looks like we got a little bit more to go to the downside on the cattle. That would fulfill a 3 drive to a bottom pattern, down about another 4 or 5 cents from where we're trading right now. And that only takes a couple of days in cattle when it's really crazy. And we've certainly been in a really strong downtrend here. So we'll watch this one also for a potential entry. We don't trade cattle too often, but when the pattern is as clear as this one, we can certainly take a stab at it and see what's going on. As far as the stock market, we had a little bit of a sell-off yesterday. We're not doing much today, but we are starting to move to the downside. We feel that we still are going to go a little bit. In fact, I think we're going to go a lot lower, but whether we do that or not at this particular time, we'll have to wait and see if this is going to be the case. There is one other thing that I wanted to mention to you. This is the, hold on one second here so we can get this. I wanted to show you where silver is right now because it's got a really nice pattern, about 20 cents lower than where we're trading right now. But believe me, this is I don't think this is going to be the final bottom. This is the silver on the 4-hour chart, and as you can see, we're almost at the 61% retracement of the June low. And so I believe we're going to go down to the 78% retracement of the June low, which is at 1650 level, but we could get one heck of a bounce here at the 1760 level in the silver. Stay tuned for Bill Meridian.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back. We have on the line Bill Meridian from Cycles Research, Vienna, Austria. Bill, are you there?
I sure am, Larry.
Good morning to you. It's good afternoon for you, isn't it?
It is, yes.
Okay, I've posted the first two charts. We'll go through them. You've got them, make it easy for them. You've got them numbered, so we should be okay. You want to start out? And also, you mentioned to me that you're going to be publishing the work of Charles Jane?
Well, we started that a year ago. Charles, for those of you who don't know, was one of the greatest technical astrologers of the last century. And he was my teacher for 12 years. He started publishing a magazine called In Search in 1958, if you could believe that. No computers, no software, and yet they did work that was more advanced than some of the work that's being done today. And it forms the basis for what a lot of the work that we do today. And in that magazine are these renowned astrologers, Lorne Edward Jandreau, who is supposedly Gann's astrologer, and Mark Edmund Jones, and Dr. Edgar Wagner, and Pauline Messina, and Margaret Morell, and very historical names. And we published the first one about a year ago, and this latest is called In Search 2. It has 3 magazines from 58, 59 under one cover, 240 pages, so you can read all the basic research. We call it the Scholar Series because it's very advanced.
Wow.
So that's available at billmeridian.com under publications.
Okay. You want to start out here with the 1, 4, and 10-year cycles? Yeah, go ahead. Fire away.
Yeah, well, the cycles research, I obviously do work on cycles. And the question is, which one's working better? And, of course, Larry, as you know, when you start this out, you think you're going to find the golden key to the markets that works all the time. It's not quite the case. You have to look at lots of different things and just look ahead at the market and see which one you think will fit. This year, it's very definitely been 1, 4, and 10 because it forecasted a weak January, February, which we got, and a recovery, as you can see that on the blue line, up until April. And April 20th, the high, April 20th is exactly the day of the high that you see there on the graph. And then it declined into late June, which is where I'll show you some other cycles down a few slides that confirmed this cycle. You just don't use one cycle, you confirm it with others. And then we got the rally up until late August, early September. And right now, where that black line is pointing, we are in early October. And you see that last dip and then a rally up through November, and then the usual early December pullback, and then a rally up into the end of the year. So I think in graph number 2, I broke it up. For those of you who are new to this, the one-year cycle is the annual cycle of the year. In other words, the market is strong in the spring, it is weak in the fall. And then we have the 4-year cycle, which is very frequently attributed to the actions of the Federal Reserve, because the 4-year cycle matches the election year, and it is presumed that the Fed juices the money supply up in the year prior to the election to make the incumbent look good. But this cycle existed before the existence of the Federal Reserve prior to 1913, and it exists in countries where they have a 4-year election cycle, 8-year election cycle, or no elections. And the red line is the 10-year decennial pattern of Edgar Lawrence Smith, where years ending in 0 have the worst returns, years ending in 5 have the best returns, years ending in 7 always bring crises. And at the bottom, that green line is the summation of them all, which you just saw up ahead as the blue line. Now, can we go down to number 3?
Yes, sir. Just 1 second. It'll be,
Sure.
It's coming up right now. There we go.
Graph number 3 is simply a blow up of the above green and blue graphs, and it shows you right in between October 10 and about 14, it shows a low and then an acceleration. That's what I think we're coming into. I've been waiting for this for some time. And now, as I mentioned, you confirm this with other indicators, and I'm sorry, the heading appears to have gotten off the graph number 4.
That is the problem of my software putting it all on one page, but I'll be able to send this out to the folks, so that shouldn't be a problem.
Oh, well, do you have graph number 4 up?
Yeah, I have it. Here it is.
It's a histogram.
Yes, a histogram.
This is the histogram that's done from my own software of all years ending in 6 in which you have an election, in which this is it. And as you'll notice, this is expected return. In other words, it is the percentage of times the market's been up, let's say 60%, times the percentage it's been up. So if that's 2%, you multiply 0.6 by 2%, you get 1.2. It's expected return. So it encompasses the probability that will be up with the magnitude. And as you can see, September had a bearish tone, as did January and June. And you'll notice October has got a very positive expected return, as does the whole 4th quarter. So this confirms what we were seeing in the previous graphs. And in fact, if you go down 1 to graph 5.
Okay. All right.
That's in the top part of that graph, the top strip, is the histogram of the expected, again, it's expected return. It is the percentage of times the market's been up or down multiplied times the magnitude, whether it's plus or minus. And that is for all Octobers going back to 1886, right up through 2015. And you'll note that there is a tendency to be weak through the 10th or the 12th. Well, that confirms what we're seeing up above, which said the low would be between the 10th and the 13th. And I'll say a little more about October in a minute. And then if you go to graph 6, this is, again, all years, well, that should read 1885 to the present. No, 1886, because there was no election in 85. All years in which there's been an election. And so that's all Novembers in election years. Oh, by the way, I may have sent October. I meant... No, this is October. This is all Octobers in election years only. So this is cutting out 75% of the years. It's only 25%. And again, you see a low around the 12th and the 13th. So again, we are confirming this time period again. And if we go down to this graph 7, which is again, it's the identical computations, but this is only the Dow Jones Industrial from 1885 to the present, in which the year ended in 6. In other words, it's 1886, it is 1896, 1906, 1916, all added together, and the low was between the 10th and the 11th. So let me just say about October, which is not on the graph, it is definitely the most volatile month of the entire year historically. That's number 1. Number 2 is half of the worst single down days have all occurred in the month of October. So 50% of the worst down days have occurred in 1 month, and there are 12 months. And October, oddly enough, usually closes on the upside. So those are the three things to remember. And as we have a strong indication that between the 10th and the 12th, the market will bottom, and I'll have another indication. But I just want to say also, keeping me on the bullish side through the end of the year, I type here on just above graph 8, this remains a bull market. The graphs below show us that the indices are at new highs, as are breadth numbers, advanced decline line.
Okay,
And
Bill,
recall that serious market.
we got to take
Okay.
a little break here, Bill, and then we'll be right back,
Gotta
okay?
sell
So
some.
just
Yeah.
stay with us.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian of Cycles Research, and Bill is going over the bullish tone of the market. You want to continue on, Bill?
Yes, I was saying that reinforcing the notion that Q4 would be strong is the fact that here in graph 8, we see that the monthly S&P is at a new high. And if we go right below that, graph 9, graph 9 is, I'm pointing out that the S&P is not even overbought yet. That red line is an overbought, oversold oscillator. It's not even up at the last high in 2014. And if we go below that, here we have the monthly cumulative New York Stock Exchange advanced decline line also at a new high. Now, typically, if a bear market is about to set in, this AD line will top at least 4 months prior to the price top in the S&P. So we don't see tops in either one of these. So I just wanted to get these technical considerations in. And now, if you'd like, the people who like planetary indicators, I have a couple in this presentation.
Okay.
Graph 11 is a normal horoscope setup for this Friday, the 7th at 9:30 when the market opens, and that doesn't really do it. I put it on a 90-degree basis, but I wanted to show you the 360, and the next one should be the 90. That's number 12.
Mm-hmm. You want me to move to 12 now?
Yeah.
Okay.
Now, the point I'm making here...
This one makes it a little clearer for me. Hold on one second. There we go.
Okay, I thought I had circled these, but I guess I forgot to put these in. Well, the pointer is on the Sun and Pluto. It's saying the Sun and Pluto are square 90 degrees apart. On a 90-degree dial, it makes it much easier to see these connections. And what you're looking at is just an extremely bearish picture. The symmetrical arrangements of planets around a common axis is called a planetary picture. So if you look to this pinkish looking thing, which is Uranus, and you see a blue line going up connecting it to the red one, which is Mars, that's saying Mars-Uranus equals Sun-Pluto. And also there are bodies in here that are asteroids and from other systems. I'm not going to explain those, but just take my word for it, that is bearish. I set up one of these every day for 9:30 a.m. to try and give me some idea of what the market's going to do. Now, if we go back to all the graphs we've reviewed, they showed a low between the 10th and the 13th. Well, this is the graph for the 7th, Friday, and the 10th through the 13th is next Monday, Tuesday, Wednesday, or is that into Thursday even? So it looks to me like this decline we're in right now is going to accelerate, and you might get a good 1 to 2% down on Friday and then take sort of Monday, Tuesday to bottom out. But I'd also like to explain the dynamic that I think has been baffling many people, and that is every time this market has dropped, the sentiment indicators, you may have noticed this, Larry, I mentioned it last time, they go from being extremely bullish to extremely bearish almost overnight. And as I like to characterize it, it was in my report that I sent to you, it's like dispirited infantry. The minute they see the Napoleon's troops coming over the hill, they drop their muskets and they run before a shot is fired. So we went from having very few assets in all the inverse S&P funds. The inverse S&P funds are those that appreciate in value as the S&P goes down. I think they were at a 3-year low, and all we did is get that one big drop in September, that first September date in which we had a decline of some magnitude, and it shot up to one of the highest readings within less than a week. And so that prevented, with all the cash around, all you need is very bearish sentiment and lots of cash, and that puts the brakes on any decline. So I'm expecting that to happen over this weekend. I'm expecting a sharp sell-off, and by Monday, Tuesday, Wednesday, we'll start getting a rally, and I think that will push through to the end of the year. So let me I thought I had included, well, these next two, actually there's a graph missing from here. It's a shame. I should have put that in there. But let me just briefly explain another graph that is confirming this, and I don't know where it went to, but it was in, Larry, you saw it in my monthly report, as Jupiter hit 0 degrees Libra. And when it did that, I did a study. It's done that, I think, 17 times since 1886. But it very clearly adds to these observations. It very clearly showed the great acceleration in the month of July, and it showed the topping formation in August and this weakness in the fall, but now it turns up. And so that one, unfortunately, I don't know what happened to that one. It's not in here. It should have been. Anyway, graph number 14.
Oh, we didn't do 13 yet. That's the one with U.S. economic expansions after World War II?
Oh, 13 is what I meant to say. Yeah, okay. This comes from my friends Ronnie and Mark at Incrementum, which is based here. It's a fund based here in Vienna. And they are firm believers in Austrian free market economics, and so all their graphs point in that direction. And you'll notice what is circled in dashed red, that is the current economic recovery, if you want to call it that, compared to all the other economic expansions from World War II. And you can see how anemic this recovery has been. And if you go...
Man, it certainly has been.
If you go down below that to number 14, now this goes back to being in New York in July, and I attended a lecture by Meridian Bartels, the chief strategist at Merrill Lynch Bank America, and she says when you do forecasts, you look to conditions from the past. Is, well, what happens if the Fed doubles the money supply, which has never been done before, and interest rates were at the lowest level in 5,000 years? She said 3,000. These guys say 5,000. How do you read that if you've got no prior precedent? Your guess is as good as mine. I take that as being bullish. It's not healthy for the economy, but it's bullish because it's providing lots of funds for people to buy art, do private equity, and whatever else they've been doing. So once again, these are the monetary conditions. So I've shown you the technical conditions, the monetary conditions, the cycle conditions. Unfortunately, I left that Jupiter graph out. I don't know where it disappeared to because I thought I put it in first. So anyway, let's just proceed, because now if all that money is being stuffed into the system, what my friends here are having trouble grasping is, why isn't gold taking off? Well, first of all, August and September are historically two of the strongest months in which to hold gold. Now, when gold declined in August, I ran a study, and it showed that normally gold is up 60% of the time in September. But if August is down, that 60 becomes 50 for September. If it's up in August, the 60 in September increases to 70% probability of higher gold prices. Well, you got a down August, and then in September, I think gold only increased by $6. And now here is the composite graph that I've generated using my software, and what does it show gold's short-term cycle is? Down. So putting all that together, the cyclical expectations are down, and now graph number 16 we'll do after the advertisement.
Yeah, very good. Thanks, Bill. We'll be right back after these few words.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Bill Meridian of Cycles Research, Vienna, Austria, and we're talking about gold. We have a question from one of our listeners, Bill. Do you ever been to the Vienna Philharmonic?
Yes. No, my wife has been.
Mm-hmm.
Nope. It's in fact, it's very difficult to get tickets to any of these things, and we are currently overrun with tourists. I've been here for 13 years. I find it hard to get reservations in my favorite cafes, and Vienna's become a very popular tourist spot.
Huh. Well, it's a beautiful place, that's for sure. I've been there a couple of times, and it's really you've lived in some wonderful places in your life, my friend. So you should be very fortunate, as we both are. Anyway, we're talking about the gold market. We're looking at, I believe, chart number 16, right? Yes.
That's a sentiment indicator for me. This is the division of the price of the gold ETF GLD divided by the gold ETF UGL. GLD is a 1 times ETF. In other words, if gold rises 5%, the GLD should rise 5%. The UGL is a multiplier with a factor of 2. So if gold rises 5%, the UGL should rise 10%. I divide one by the other. A high reading tells me that gold investors are cautious. They are not too certain of a gold rally, so they don't want to take that much risk. So they buy the 1 times multiplier ETF, the GLD. You see the high reading up in November, December. And then you'll notice their fear or caution erodes, and it comes down to a low here, July, August, September. They are more prone to buy the more aggressive UGL, and that is bearish. That tells me they're being too aggressive. And so that was one confirming indicator which had me very cautious. I was long and bullish on gold when August began, but when somewhere in the middle of August, I put out a sell on gold, I think around the 3rd week, because it was just not shaping up to be a positive August.
I can agree with that.
That's where we are. That's where we are right now. And in fact, my friends with the gold fund here are unfortunately down. They're looking at, and Larry, you'll relate to this, they're looking at all the fundamentals and saying, well, all the fundamentals point up. Yes, but the price doesn't agree with you.
Yeah,
that's
sure.
why we do all of this work, to fill in the gap.
That's for sure. It's certainly, given where money supply is, gold should be trading at, probably
Yes.
2,500, not 1,200. So anyway,
Well,
that's
I think
neither here nor there.
the explanation is the bull market that ended in September 2011 already discounted that. And subsequently, we had a decline. Now we've had a weak rally, but the rally, as my Elliott wave friends point out, does not appear to be impulsive. It appears to be corrective. It appears we're doing an ABC up. And this may be the B wave down, and then you get a C wave up, and then it'll go to even lower lows. And as I like to point out, the last bear market in gold was it 19 or 20 years long?
Yes, 1980 to 2002. It was 22 years long.
And I'd like to point out, as Larry, you may have read in the last report, there are certain drivers. And in the stock market, 3 primary drivers are population growth, currency inflation, and human innovation. And in the gold market, you do not have technological innovation. I don't think population growth helps you very much. You have basically currency inflation. So the result of that is that the stock market tends to rally, retrace 38% of its prior bull market, rally again, retrace 38%. Not so with commodities, as I'm sure you know. They can retrace 100% of their prior move.
Yep, that's happened more than once, and I've seen it anyway, for sure. I remember when gold got to 860 back in January 1980, the whole world thought it was going to 1200. And it dropped all the way down. I believe the low was around 230 an ounce, I believe, in 2002, as I recall. But it was very close to that anyway. Okay, Bill, we have a question about interest rates.
Yes.
You mentioned it about this 5,000-year low interest rates. What's your feeling on, because, the bonds and notes are really starting to look bearish. We're breaking down below some pretty serious support today. And it looks like rates are going to go higher based on the charts. What's your feeling on that?
Well, to tell you the truth, this is the one market I've been at odds with for about 4 weeks or 6 weeks. The cycles did not indicate this magnitude of a breakdown, but we had a little short-term, what looked like a rally to me up into the 7th. And I was planning to go bearish on the 7th, but bonds were already down. So some of the much bigger cycle is pressing down. And it is the second half of October is not bullish for gold, for oil, or for bonds. And so right here, I have to be bearish on bonds.
I can agree with that for sure. We have one other question is your we mentioned gold here, but do you have any long-term support levels that you're looking at in gold? We've been talking about this 1275 here at TFNN for quite some time, just based on some patterns and Fibonacci work, and we got to 1268 yesterday, which we should get a little bit of a bounce from there. But any particular level that gold would hit that would light up some bulbs over there in Vienna?
You mean downside objectives? I agree with what you just said. I had the same target. But I think if you do what my friend Tony Plummer does, he takes the price of gold from 1933 up until a high in 2011, and he says, I think 1190, 1200 is a very critical support level. He said that would be sort of an invalidation of the entire gold move up, and that would have fundamental implications such as they're issuing lots and lots of credit into the system, but it's not taking. It's not increasing prices. It's only increasing asset prices. It's not stimulating business. And in other words, Tony makes the point that when you break 38.2% or 50% retracement levels, it's signaling an underlying fundamental change. Mm-hmm. And that level, I think, is around 1190, 1200.
Yeah. What happened to precious metals during the Weimar thing in Germany when it was inflation went crazy and you couldn't even buy a loaf of bread for 20,000 francs? I mean, do you remember what happened to gold and silver?
I don't have. I could look that up. I don't have the answer, but one of the things one of my scholar friends told me was that they were so restrictive. You were very limited to what you could do with your money. And some people point out the stock market went way up. He says, yes, because they would shoot you if you try to invest in anything else. So there was a good reason for that. And these little, you have to study these very carefully, and you find out the fundamentals are very different. And I have one last chart, which is actually a horoscope on page 9.
This wouldn't happen to be from HRC, would it? Hillary Rodman. She's got a birthday coming here on October the 26th. We're going to have to celebrate. Yep. Happy birthday. Fire away, my friend. Oh, we might have a break. We'll start this, but then the break is going to come, and then we'll finish it after the break. So go ahead.
Okay, well, I'll try and get through this without a coughing fit. I don't know if you noticed this, but the astrology was in the news in the Wall Street Journal that astrologers want to know what time Hillary was born. Well, it's 8 p.m. I mean, I got this from Lois Rodden 25 years ago, and I've been writing monthly, in addition to doing financial work and fund management. I write as my hobby my Bill Meridian column in Dell Horoscope magazine. I've been doing it for 26 years. Charles Jane wrote it before me, during which he predicted most of the course of World War II in the 40s. He wrote it up until 58. Okay.
Got a break here, buddy. Stay with us, and we'll get back to this. Thanks, Bill.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian of Cycles Research, and we're looking at the birth chart of Hillary Rodman Clinton.
Yes. And so this Wall Street Journal article stated that astrologers were arguing over her birth time. Well, I got this 8 p.m. time a long time ago from Lois Rodden. I've used it for 25 years. And the circles on the chart, those ellipses, let me explain. At the top, you see the moon. The moon is at 29 Pisces 11. That is only 49 minutes from 0 Aries, which is a world point. If you go to the ascendant, 29 Gemini 50, 10 minutes from Cancer, which is a world point, which means the opposite points, which are the asteroid Juno and the descendant, are at 0 Capricorn, which is a world point. And anything that's at 15 degrees of fixed, like her, Mars, and Pluto, are equal to that. So this whole configuration equals the world points represent a direct access to the public. So if I said to you, Anthony Perkins, you would think of the actor who starred in what movie? Psycho, especially the shower scene. He has a knife in his hand. His Mars was at 0 Aries. That's what he's known for. Or if I said H. Ross Perot, his Jupiter is 0 degrees Cancer. That's what he's known for. On the day that the Bernie Madoff news broke, Mercury was conjunct Pluto at 0 degrees Capricorn. Very shocking financial news that everybody heard about. So if she's born in the morning, the world points are not heavily tenanted or inhabited in that chart. And all you have to do is say Hillary, like you say Elvis, and everybody knows who you're talking about. That's the moon very close to 0 Aries in the 10th house. Now, Her horoscope looked absolutely terrible. The last time we spoke, you said you got September right. It was from this horoscope for August and September. From the end of September right through to election time, her chart improves dramatically. And I don't know if it's enough to win the election. I don't think so. For one reason is the progressed midheaven, which is the point at the top of the chart, 5 Pisces. I hate to get technical, but some people out there will understand. Will have advanced by solar arc and will be connected to the Mars-Pluto, which would be saying Mars-Pluto is a very bad temper. The last thing you want to be known for.
Hey, listen, Bill, thanks for joining us, my friend. This is the end of the show. We'll have you on soon, and we really appreciate you coming on.
Sure.
Thank you very much.
Bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.